Finally, we've gotten the Fed funds reduction of the rate they offer to banks when it comes to lending to each other out of the way. Yay, finally. So much drama built around this. This is crazy. Yeah. Yeah, but what does it mean? I guess that's the biggest question is, what does this mean when it comes to lowering the Fed funds rate? Well, let's first define what it is and how it affects you and me. Number one, the Fed funds rate is the rate for which banks borrow from each other. So if I'm a bank and I need money for deposits to cover withdrawals tomorrow, I will borrow overnight money from another bank or from the Federal Reserve, and that's the rate for which I borrow it at on an annual basis, okay? Second, Fed funds rate plus prime, what is equal to prime, is typically 300 basis points or 3%. So if they lower them to between 4.75 and 5%, which will become effective not over completely overnight, but over time, because I didn't see it move today, this morning, but you add, say, 4.75 plus 3%, which is the bank markup, and that's your prime rate. So that prime rate is attached to credit card rates, attached to loan rates, home equity line rates, blah, 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 so forth, on and so forth. Mortgages, like 30-year fixed, 15-year fixed, that kind of thing, is attached typically to the U.S. 10-year Treasury bond. So whatever the Treasury 10-year U.S. 10-year Treasury bond yield is at, then you mark that up. So let's say it's, I think, at 3.7% last night. It went up after the hike. Interesting. Add 3% to that, and you got about 6.7. Great credit. You discount that a couple points down or basis points down, and that's your 30-year mortgage rate. So how does this affect you and I? Well, honestly, not right away, most likely. If you're living off credit cards, which a lot of Americans are, credit card debt is at a all-time high, over $1 trillion in consumer credit debt and loans. Delinquency rate as of end of first quarter of this year, 2024, was at 10.3989%. Anyways, it was up. Delinquency rates on a 90-day basis was up. That's not positive. People are running out of credit to borrow, and credit card interest rates on average are about 20 to 21%. If you have crap credit, you're up probably between 29 and 33%. So you're paying a ton. So this hype, excitement over the Fed lowering rates, you know, the Democrats, Elizabeth Warren sending a letter to Jerome Powell to lower 75 basis points. There's a reason why you do this so aggressively. And that is because things aren't really working out in your favor. The average, if you go back to like the 1960s and you look at the average Fed funds rate, right around 5.25 is about average. So if that's average and our economy is doing so well, as Chairman Powell said in his press conference yesterday, he says, we're solid, it's good, blah, blah, blah. You know, it's just, we're just in a readjustment period. Readjustment period, why? If the historical average is 5.25, why would you have to lower them? Well, you lower them because you see a major storm coming on the horizon. You see the pain of the labor market. Now, he said the labor market was good, but the thing you're not looking at, most people aren't looking at, and they're not talking about, is the non-farm payroll hiring rate, which since February of 22 is down, I believe, 19+%. Every quarter or every time they report, it goes down. And then you throw in readjustments. So every time they've reported, I think in the last, 10 plus times, they've readjusted the previous reports. They this last report on the non-farmers payroll, they readjusted it for July and June because they then have full data on that. So here's the thing. If you see the non-farms payroll around, say, 100,000 in hiring, reduce it by 50,000, and that's really probably where in the ballpark where we're at, which is no good. And if that number continues to change and go lower, that means that our hiring, our number of available jobs is declining. Layoffs, that's just a byproduct of lack of hiring. Why don't you hire? Because you're not growing. Why aren't you growing? Because nobody's buying your products or services. Why are they not buying your products and services? Because they have no money. They're not outpacing the cost to live in the United States. So if a corporation is feeling that strain and they don't see that money coming in, they're going to quit hiring. And that is the true number you need to be focused on when it comes to employment. It's non-farm payroll hiring. It is declining. It is declining quickly. People talk about this presidential election, not to get too political, but when you look at the data, you take the personalities out of it, you take all that, and you just start looking at the data, we are no better off. We're actually worse off when you look at the data since the exchange of administrations from the last election. And I know this could piss some people off, but you know what? Just look at the data. If your heart rate is 150 and it's consistently like that, chances are you're on the verge of a heart attack, right? Just look at the data. And that's what I did the other day. I posted on my Facebook page, Trent Grinkmeyer. Go check it out. I posted a bunch of charts and stuff. It's just data. And I think that's what we need to start really focusing on is the data. What is happening in our economy? Now, a lot of this probably was started back in the late 1990s when lending laws loosened up under the Clinton administration. Money became free-flowing. Now, my partner in crime, Mark, would say this actually started back in Nixon's time when we came off the gold standard, which I don't disagree with. When we were able to print our own currency to adjust our monetary policy and just be free for all with that, that became a pretty big problem. So when you're looking at all this, how does this Fed funds rate affect you? Probably not much today. You're going to see a bump in the stock market today. I think the futures were up this morning before I went out for my 6:30 morning walk. We're up 400 on the Dow, 400 on the NASDAQ. Remember, they're just pulling you in. They're getting you all excited. You say the first 30 minutes of the market open is the kids playing in the kiddie pool. Let the kids get out of the kiddie pool. Let the market settle down after 9 o'clock Central and see where the real big boys, the adults, get in the pool and start playing. The last hour and a half of the day is typically when markets make moves in a big way if they're going to make moves. So be really cautious about this. Don't get wrapped up into this hype about Fed's funds rate. You saw a lot of my friends who are real estate agents praising the 50 basis point lowering, this, that, and the other. I'm like, don't you guys lend against the 10-year treasury? It's already been falling. What's this rate lowering good for you? How is it good for you? It's not really good for you because we are in a recession. We are in a recession because things cost enormously a lot more and our stock markets are starting to slow. Look at the S&P. It's starting to hit, it's hitting a resistance line. Yeah, it's going to probably set new highs today. It may breach that and come back down. The key is, if it does breach it, does it stay above it? Does it test it and then move higher? That's what you're looking for. So I know a lot of people who've got 401k plans, who've got investments. They're hardworking, regular guys and gals of the United States, and they don't have time to keep up with this crap. Here's the thing. It's not that complicated. You just need a process and a strategy. How do you build a process and a strategy? You seek out knowledge that teaches you how to build that. Best of US Investors, www.bestofinvestors.com. bestofUSinvestors.com, or easier URL you can go to is www.bus13.ai. That's www.bus13.ai. Check us out. We are going to be launching a new silver program. We're renaming our categories. We have platinum, which is for swing trading, very active investors looking for the daily stock ideas to trade. Also Kerry's cheat sheet, which is the fundamental analysis on AI stocks that he likes, along with the bus tracker, trend tracker, and portfolio allocation. You drop down the premium and you basically take out the swing trading element and the swing trading call on Fridays, but you get Kerry's call on Friday as well as a handful of other things. We're going to be offering a silver program, which is basically investors who basically invest in the S&P 500, when you should be in and when you should be out and where you should go with that money kind of trend. It is not a day-to-day active portfolio. It's more like a monthly review. And honestly, our allocation to the S&P 500 on a long-term monthly basis, gotta check us out. www.bus13.ai. That's www.bus13.ai. Hopefully this has been helpful. I know you all are grinding. You're working hard. You're noticing the cost of living in the United States. It's time for you to take control of your wealth. Buy and hold for the long term. Well, you got a declining US dollar in value. You got an increase in inflation. Are you really making any money? Check us out, bus13.ai. Peace. Have a wonderful day. Live loud.